Can a tax treaty benefit non-resident aliens? Imagine earning income in the United States and wondering if there's a way to pay less in taxes or even avoid some taxes altogether. Well, there is a tool called a tax treaty that might help you. Tax treaties are agreements between the United States and other countries designed to prevent double taxation and make things easier for people earning income across borders. If you are a non-resident alien, meaning you are not a U.S. citizen and do not meet the criteria for being a resident for tax purposes, you might still be able to benefit from these treaties. Tax treaties can lower the tax rates on certain types of income like wages, scholarships, fellowships, or independent personal services. For example, if you are a student or worker from a treaty country in Latin America, you could pay less tax on the income you earn while in the United States. Sometimes, these treaties even exempt certain income from U.S. taxes entirely. That means you could keep more of your earnings instead of losing a big chunk to taxes. To take advantage of a tax treaty, you need to meet some conditions. First, you must be a resident of a country that has a treaty with the United States. The U.S. has treaties with more than 60 countries, including many in Latin America. You also need to qualify as a resident under the treaty's rules, which might be different from your country's laws. Next, your income must fall under the types of income covered by the treaty, like wages or scholarships. You also have to properly claim the benefits. This involves submitting specific forms to the Internal Revenue Service, the U.S. tax agency. For example, if you are claiming exemption from withholding on personal services, you would fill out Form 80 to 33. If you are filing a tax return to claim the treaty benefits, you need to include the appropriate paperwork. Plus, you need a Social Security number or an individual taxpayer identification number to file these forms. For families, especially those with members who are students, workers, or researchers from Latin American countries, these treaties can make a big difference. They help reduce the tax burden on income earned in the U.S., making it easier to manage finances and avoid paying double taxes to both the United States and their home country. It's very important to check the specific treaty between the United States and your home country because benefits and rules can vary. Properly claiming these benefits can lead to significant savings and less withholding tax on your income. So, if you're a non-resident alien earning income in the United States, understanding and using tax treaties could be a smart move to keep more of your money. Just remember, making sure you meet all the requirements and filing the right forms is key to accessing these benefits.